Good morning, everyone. I'm very happy to be here for an opening talk just after Fabien's keynote. I hope you are all doing well. And I invite you to dive into generic accounting topic together with me. I hope it's not too early in the morning. And if it's too early, please accept my apologies. Today, we are going to talk about a better way to manage deferred revenues. So while you can scan the QR code or take note of the URL of the pad that we will use together for further questions, let me first explain what a deferred revenue is for those who would not know. Suppose you well, we are Odoo. We invoice customers, of course, for subscriptions to the software. And it can happen that an invoice comes already now in October, but the subscription period is from January 2025 until December 2025. Then I recognize my revenue too early if I consider the invoice now in October. I have to defer it in time. This is what we are going to talk about. How do we proceed? So, why do we say a better way to manage deferred revenues? It's simply because the user experience is now better, the computations are accurate, and we also want to highlight the, the facility, how it is to use, and how easy it is to audit the figures when you have mass of data, masses of income. It still remains very simple. So what I want to show you today is how flexible, accurate, and scalable our solution is. So first of all, we talk today about the deferred revenue because we have this concept here that at Odoo we sell a lot of subscriptions. So we ourselves are the first users of the solution. But of course, all what I say can adapt for deferred expenses as well in Mirror. So in the section for accounting, in the settings of accounting, you have a default account section. And in this section, you can specify exactly how you want this deferral to behave. And you can distinguish the way it behaves for expenses and the way it works for revenue. So globally, you specify a journal, a miscellaneous journal where it happens. Deferred expenses account, accounts in your balance sheet where the amounts are deferred. They are not impacting yet your P&L, profit and loss. Then you have a third setting, which is the way you will generate entries. Either it's automatic or it's manual. Automatic means each time you confirm an invoice, the deferrals will be computed in the future, and they will auto-post as time passes by. Or you can do it manually, and this is the better way, the enhancement that we provide today. Then, depending on your country, depending your specificities of your own company, you can either compute it based on days. So what I mean by that is the month of January has more days than February, 31 versus 28, and January will weight more. If you analyze month by month, the weight of January will be higher than February, in my example. You have a second mode which is per month. All months are constant, so you divide between months. January and February are the same. And the final mode that I want to highlight as well is the full months. What does full months mean? Each time a month is started, each time a subscription, a rent, something that you have to defer starts, the month that it starts will count for a full month. And of course, if you have something like, for example, a rent that starts from January 15th, 2025 until January 14th, 2026, the last month of January 2026 will be neglected because we consider a full month in January 2025. Why is it a better way? Now you don't need to impact a balance sheet account anymore linked to models that you have to know by heart. You can simply just impact your P&L account, as simple as can be. This account may come from a product that you sell, so it's very crystal clear and simple. And we also added the start and end date fields that are among the optional fields. And thanks to those, you can define on line level, on invoice line level, you can define the periodicity to take into account for your invoice. We added as well a report, and this report is a bit specific because this report is not based on journal items, as any report would be in accounting. Basically, they are almost all based on journal items. Here, it's a theoretic report, so it's thanks to the invoices that you have recorded and the invoice lines, thanks to the P&L accounts, start and end dates that you have mentioned on your invoices, the report computes what the deferrals should be. And thanks to the button, when you are in the manually and grouped mode, thanks to the button, you can generate the entries in Odoo, grouped, and in one entry, you can obtain what you would have obtained in the other mode with plenty of entries. So it's one entry, manually triggered, grouped. Don't worry, if you press the button and then make some changes to the calculation basis, so you add one more invoice, you multiple more invoices, you can press the generate button several times in a row, and Odoo will understand that there are additional moves to compute and take into account the ones that exist. This report is available in both modes. Either you work and trigger the deferred revenues each time you confirm an invoice, like we would do for deferred expenses at Odoo. You have the report, and if you work manually and grouped by this enhancement, then you also have the report. The only difference is that manually and grouped means you need this button. So in one mode, you will see the button. In the other mode, you won't see it. In my example earlier, I said that the rent started in January 2025, but we are in October. So what happens for the months of November, September, and December in between? Those months will be considered thanks to the not started period, where you are not obliged to defer immediately. So for a while, if you have a delay between the invoicing and the start of the period that you invoice, it can happen. We have this column that takes into account the use case. While using the report, we have foreseen a few banners that will help you detect whether it's the right moment or not for you to trigger the generate entry button. And on top of that, we will see together now that it's very easy to audit. So here, for example, you can see that we have 3,000 euros, let's say, or it's dollar, in the product sales account, and I want to defer those up. If I press the 3,000 amount in the previous screen, then I can see exactly what is the calculation basis. Here I have one invoice for the sake of simplicity, but of course you can have a list, an exhaustive list of all the invoices that are concerned and that need to be delayed. So the audit is foreseen as well. The easily to audit is foreseen. Now let's take a look at the deferral entries. Here I have a very simple use case with two invoices, very little, but you can imagine a large database. We will shrink the number of items as much as possible so that your database is not bloated neither with entries nor with items. The purpose is still achieved, it's still auditable, but when you see for other cases the list of all the items you have in your database, you don't face those entries. You are not each time required to filter on those entries because basically you trust Odoo, it has to be done, but you probably don't want to intervene on those entries most of the time. So what we do, we first cancel, reverse the P&L accounts that were impacted in the invoice lines. We considered 3,000 on the first account, 1,500 on the second account. It was the data that I had on my invoice lines and invoices. We cancel everything. And then we just take into account the portion for the months. Here is the month of October 2024. We just have 1/3 each time. Because of the data, it could be different. And here, I have reversed what was on the invoice lines for just taking into account what needs to be considered in my P&L. The last account is the one specified in your settings from the very beginning, and it goes to the balance sheet, waiting for its turn to come. The next day, this flow, you will do it as if you were on the last day of the month, most of the time, or last day of the quarter. And the next day, what we do is that we reverse that entry, purely and simply. We reverse the entry. The purpose of it is to provide a fair value of your accounting figures. But suppose you would have additional invoices or things that were not foreseen that you need to consider. By the way of reversing the moves, the deferral moves on the next day, day +1, then if you repeated that month after month, you have the guarantee that the image will be as close as can be to the record that you have at the moment of posting the entries. So we have seen together how flexible it is, because of course you can trigger those entries anytime. Suppose you would like to go to your bank and discuss investments together with them, etc. You need to provide the situation within the month. You can do it. We will trigger the entries at the moment you want it to be triggered, and it will be reversed the next day. So flexible, you can trigger it anytime. Accurate, since we each time reverse it the next day. It's scalable. What does that mean? Probably you won't worry about that when you start your business. But I read somewhere, maybe on the back of my car, that businesses grow with Odoo. The idea is here that if you grow your business, you might at some point feel that there are too many entries, too many items in the on validation mode, and you would like to move to the manually and grouped mode. This is foreseen. Odoo will be clever enough to detect the change of mode, and the computation will remain correct. Eventually, before we go through your potential questions, I wanted to highlight as well how auditable the solution is, because from the invoice, you will be able to jump to the deferral revenues via smart buttons. From the deferral revenues as well, you can jump to the related sales via smart buttons. And from the report, once the entries are generated, if you click on the amounts, you obtain the list of all the deferred entries that are relevant for the amount that you click. So auditability was one of the main focuses we had when you have hundreds or thousands of entries, invoices, I mean, grouped in one or two if you did it twice. Sometimes you need to make sure that it's correct. It will be correct. But to feel better, to do your job of check, and we have foreseen that. So I invite you to already scan the QR code if you didn't do it, and to already populate your questions in the pad, if any. I will just take the opportunity to show you how it happens. Here you have in the reporting section the two menu items, deferred expenses and deferred revenue. As you can see, deferred expenses, I also have the possibility, but I don't have the generate entry button. And for the deferred revenues, up, I have it, and I can trigger the generate entry button. Of course, if I press on it, it will trigger the entries that I need and that I was talking to you about. What can I say again? Here you have the periods, and you will see that thanks to those arrows, I will move from one period to the next, and Odoo will adapt. Here, I went from November to October, and each time here it disappears because the invoice did not exist yet. And you can see that globally, Odoo computes automatically this evolution in time of your deferrals. Well, now it's time for me to thank you for your attention and to check whether you have any questions.
Hello, Benjamin. Like, thanks for your presentation for the deferred revenue.
My pleasure.
Yeah.
I also have it here if you want, but then everyone sees the questions.
So let's look at the questions here we have. Okay, let's start from the first one. I want to make difference expense for salary. However, I don't have any invoice. I need to do it from date and end date. And doesn't exist. The end date doesn't exist. How to proceed?
I guess then you will have to do a workaround because indeed the start and end date exist on the customer invoice and the vendor bill. Same goes with their reversals, so credit notes and refunds, of course. But if you want to do that for salaries, I guess the best way would be to consider your salary a vendor bill because those fields are not available on journal entries themselves.
Okay, so should do a vendor bill if you want that date available. Okay, next question. How can I do it if I have different accounts for the deferred revenues?
We used to see that and consider it's basically probably change resistance because it's way easier to impact directly the P&L account. Before I knew Odoo and before I worked at Odoo, I experienced to be a manager, business, well, I don't know the exact word, but controller, business controller in a company, and I would have never done that. I would never have displayed in the balance sheet different accounts. So it's probably change resistance due to the fact that it existed in Odoo, but the benefit of impacting the P&L accounts from the very beginning, from the invoice, is way better, and the audit is still possible, as I show, in the dedicated report. So don't expect your balance sheet to give you this breakdown. The report will do it. What I didn't show, because we can't show everything, but it comes to my mind, is that on the report we have different group bys. So each time I opened the report, it was grouped by account, but we have also foreseen that you can group by product category or that you can group by product. So at the end of the day, what matters most is that your P&L impact is correct.
Okay, thanks for the answer, Benjamin. So next question we have here is how VAT treated with the deferrals?
The VAT is not treated in the deferrals. So here the question is really to impact P&L accounts and balance sheet accounts. So VAT is left aside and you won't have any impact on VAT. I assume that in the question, the person who asked was talking about deductible and due VAT. Those amounts are due immediately on invoice in most cases.
Okay, I see. So we have next question about what about the revenue trigger account for the deferred revenue for auto generation based on the product period? Also to use different accounts which are forced by accounting.
I'm not sure I get the question.
Okay. So it asks about the revenue trigger account for the deferred revenue for auto-generated base for on the product period.
Okay, but I think I won't understand better here. So I invite the person to come to the accounting booth today, where I will be most of the time, and we can probably dive deeper in his question because I don't get the point.
Okay, no problem. So let's pick the relevant ones. Okay, how do you correct the deferred revenues when you have a partial credit note or global credit note?
So the thing is that it depends on the time. So the timeline matters. And in the question here, I don't exactly know where at which moment the partial credit note happens. Is it before I generated the revenues? After I generated the revenues? So what matters here is that we compute those deferred revenues. I'm waiting a second. We compute those deferred revenues according to what we know at the moment we press the generate entry button. So each time we will press the generate entry button, it's quite simple. We will detect, according to the accounting date on the invoice or on the bill, we will detect, did we know this invoice at the moment we run the report? We will take the last day of the report. So for example, for the report on October, it will be October 31st. For the report of the third quarter, it will be September 30. We take the last day of relevance of the report and we detect, did we know the invoice at that moment in time? Most probably, I will be myself in real life in the future compared to that report date, but we will check whether the invoice existed before, and if it existed, then we go and get the start and end date, and we see whether anything is to defer. So if there is any discrepancy, that the revenue is recognized too early. So we defer revenue when the end date is later than the accounting date. Diving into the detail is quite complex, so I really invite you to test and to, with your use cases in mind, and to get back to us asking for more questions if you need clarity, because the details of how it works computation-based, we can talk about it for hours.
Thank you. Here's this interesting one about migration. So I'm not sure it is like fully applicable, but there is a question like there's a data migration with deferred entries from Odoo 15, and then it's migrated to 17 or 18. So they are not computed as deferred entries automatically.
So indeed, what you will see disappear, because it's a major change, what disappears is the deferred revenue models and the deferred, basically the models. So there was a before and there will be an after, and anything is not possible. So here we have made a strong decision that this paradigm is for the future and is something we really need. And of course, in case of migration, we will certainly not touch the generated entries. Those who are generated, we will certainly never intervene is the entries in your database. But for the future ones, the mechanism changes. So don't expect to see your deferred revenue models anymore, since we just removed the object.
Okay. So here is a question asking, is it possible to have a chart with forecast? I guess it's the deferred revenue forecast, maybe?
I don't understand the question like that, so I would like to invite the person to come and we will discuss that at the booth.
Okay, so come to meet him in the booth. Okay, is it possible to apply some weighted deferrals, like 80% in 1 month and then 10% in next month, etc.?
It is possible when you record the revenue, so you have to create 2 lines so that you explicit from the invoice what you want to expect, but you don't have a field showing this percentage. So globally, a line is deferred, but not the portion of an invoice line.
Okay, so I think the question here is more or less complete. There's one, again, not sure if very applicable, but like how to easily reconcile the payments, for example, monthly payment of insurance. But like is it more applicable on the recurring
I
module
don't,
rather than deferred?
I don't think it's really directly applicable to this talk here. Uh, I, I imagine I foresee the case that the question that is asked, that probably the invoice is bypassed, that we don't consider the invoice, but then I invite to reconsider the flow, because indeed, if you just want to consider that based on bank reconciliation of just journal entries, it won't work, as it requires having an invoice or a vendor bill.
Okay, so I think we finished the question from the pack. Okay, we might have 4 minutes.
We,
Can you check on YouTube? Do you have
what do you want to check?
the slide?
I have here.
It's the same.
I have to force reconnect. So I guess we have some time left, but we answered most of the questions. Don't hesitate to join us and to come and talk for any feedbacks at the accounting booth. We will be there for the 3 days to come. Thank you.
Thank you.